Regulators appear to be taking no action over what many believe is a serious breach of ASX listing rules. On Tuesday, Virgin Blue named Qantas veteran John Borghetti as CEO-elect. But news of Mr Borghetti's appointment appeared in most major newspapers well before any announcement was sent to the stock exchange. Andrew Robertson reports.
All smiles at Virgin Blue on Tuesday as the chief executive's baton was publicly passed from Brett Godfrey to John Borghetti about an hour and a half after the company informed the Securities Exchange. The carefully stage-managed event had been gazumped though, as nearly all major newspapers had carried the story that morning in reports written the night before.
Occasionally an individual newspaper will get a scoop, but if the same thing appears in all newspapers on the same day, it really does look like a sanctioned leak.
The stock exchange listing rules are very clear on a company's obligations to inform the market first on important decisions. Listing Rule 3.1 says once an entity becomes aware of any information concerning it that a reasonable person would expect to have a material impact on the price or value of its securities, the entity must immediately tell the ASX. But the listing rules go further. Rule 3.16 says an entity must immediately tell the ASX if there's a change of chairperson, director, chief executive or company secretary. And in regard to the media, Rule 15.7 says an entity must not release information that is for release to the market to any person until it has given the information to the ASX.
The whole point of the continuous disclosure rules are that the market should be informed at the same time and in a clear and definitive manner. This is not achieved by releasing partial information to selected media.
Virgin Blue chairman Neil Chatfield believes the airline has fulfilled its continuous disclosure obligations.
We've actually brought our shareholders along the journey with us at the AGM, and the recent results are very comfortable.
You're comfortable with it telling the newspapers first before the market, your investors?
Well, we didn't tell the newspapers.
Will you be investigating how that got out?
Yeah, I think there's been a lot of, it's an iconic business, and it's. I think we're in a market where things tend to leak a little bit, and a lot of people would be speculating on this particular appointment, and that's what we viewed it as, speculation.
An explanation people such as the Centre for Corporate Governance's Professor Thomas Clark take with a grain of salt.
Leaks shouldn't happen about something as important as your CEO, and I think Virgin Blue in the past have been a little cavalier with the disclosure requirements that they should be more careful about.
Whilst the board might not have formally sanctioned it, maybe someone on the fringes of Virgin Blue has decided this is an appropriate course.
The market regulators, ASIC and the ASX, are taking different stances on the Virgin case. ASIC says it won't comment, while the ASX says it won't be taking any action. The reason is the market was closed from when the papers hit the streets up until the airline's official announcement to the exchange at 9:24 on Tuesday morning. However, for one leading investor relations firm, that ignores the fact that financial markets now operate globally.
The actual day-to-day market trading between 10 a.m. and 4 p.m. is not the boundaries of when trading in securities actually exists. Trading in securities can exist 24 hours a day, 7 days a week, anywhere in the world.
Ben Rebick believes trading halts are an excellent way to signal to the market that something is happening. He says Virgin Blue should have asked for one as soon as it was sure John Borghetti would accept its offer to become CEO, regardless of whether the market was open or closed.
So for trading that might occur off-market or outside of ASX trading hours, market participants can be aware that the company has material information that may be incomplete and therefore can act with due caution.
Virgin Blue is not the only company raising concerns about adherence to the continuous disclosure rules. The Australian Shareholders Association, which represents smaller investors, believes it's an increasing problem.
There are a number of occasions during the year where we go to companies and we say, why didn't you disclose this earlier? And it will be subjective, and it's one of those things where they say either that they decided at the time that it wasn't material, or that it was still confidential, or that there wasn't enough information earlier.
And in another media-related case, the Financial Review last week carried a front-page story headlined, "Leckie fires up as Stokes tunes into an overhaul." The story included an interview with Seven Network boss David Leckie. Also buried in the report was the revelation that the Seven Network was poised to announce what insiders say will be a far-reaching restructure, one that may further cement the grip of major shareholder Kerry Stokes. The merger of Mr Stokes' privately owned Westrac and Seven was officially unveiled later that day.